Hello everybody, my name is Alan. I'm going to be going over how to do problem 6 in our homework about the statement of cash flows in week 13, chapter 12. Right, so the first thing to notice here is that it's asking us to create a partial statement of cash flows for our operating activities, right? Operating activities is the most important section on the statement of cash flows, as opposed to investing and financing. And so it's asking us to find here at the bottom, the net cash provided by operating activities by using the indirect method. And in order to understand how to do this, the difference between the direct and indirect method, it's actually easier if we go ahead and take a look at the original accounting equation that we received at the start of our semester. And that equation is assets equals liabilities plus stockholders' equity. And when we're solving, when we're trying to find, I guess I should say, the cash flow of a company, what we're really doing is we're rearranging the equation algebraically to solve for cash, for the cash account, right? So in this case, you can't just immediately solve for it because there are many different types of assets. You have cash, you have inventory, you have fixed assets, you might have an accumulated depreciation account in there. So there are different types of assets that you have in the assets section. So basically, in order to solve for cash, we need to subtract, or we need to algebraically move those to the other side of the equation. So here below, I very simply did that. I went ahead, I took cash, and I took these other asset accounts, just some common ones, for accounts receivable, inventory, and fixed assets, and I subtracted them from assets and moved them over to the other side of the equation. And you'll notice we also have accounts payable, which is our liabilities account, and our net income. And net income would be part of stockholders' equity. And so it's really interesting to look at this because you'll notice that whereas accounts receivable normally has a debit balance, we're normally used to seeing accounts receivable in the positive. On their statement of cash flows, it's actually going to be the opposite. It's going to be a negative value for increase. Same thing for inventory. When we increase inventory, it's going to be a negative value. When we increase fixed assets, it'll be a negative value. And because accounts payable and net income were already on that side of the equation, they're going to stay positive. So as we increase accounts payable, it'll be positive. And as we increase net income, it'll also be positive. So that's how we've rearranged the equation to solve for cash. And the reason that there are delta values here, it shows the change in accounts receivable, inventory, fixed assets, accounts payable, and net income, is because when we're using our statement of cash flows, we're looking at the difference between two periods of time, or the start of a period or the end of a period, for example. And so really quick, I just want to explain the difference between the direct method for the statement of cash flows and the indirect method. So for the direct method, it's actually simpler to figure out your net cash, because you'll just add all of the accounts in your cash value. So for example, if I had a few journal entries of 150 and maybe another 50, a statement of cash flows would just be adding all the values in my cash value. So I'd have a total cash flow of 200. But there's also the second way of finding it out, the indirect method, where you just add these other accounts, everything on the other side of the equation, together. And that'll give you the exact same value. And I'm not going to create more fake journal entries to show that, because you can see it algebraically here. So let's go ahead and look at the example. So it tells us that our net income here in the equation is 181,600. So that's our value over here at the end. So we're going to go ahead and I'm just going to put this here in the equation. It goes here, right, with net income on the statement of cash flows. So we're given net income, and then the next value that it gives us is our accounts receivable decrease. So accounts receivable decreased. We can see it's right here in our equation, accounts receivable. And normally a decrease would be a negative value. However, because we've rearranged the equation, a decrease in accounts receivable is actually going to be a positive value. So it'll be 79,400. And again, you can see that because on this side of the equation, anything in parentheses, it increased. It's increased by making it more negative. So in this case, when we make a value positive, in the example of accounts receivable, it's actually decreasing the value. Okay, let's see. The next value that it gives us is prepaid expenses. It's an increase of 30,400. And I didn't write it here in the equation, but prepaid expenses is normally an asset. So when we arrange the equation, an asset would become a normal credit balance here. So I'm just going to throw it next to it here. We'll say 30,400. Notice here it's increasing. And because it's increasing, we're going to actually make it a negative value. The next value that it gives us is our inventories, an increase to inventory. And when we look here, inventory, again, it's an asset. So when we moved it over, it became a normal credit balance here. So we're going to go ahead and we're going to put that as 42,600, and it's negative. So that's the last value we have. And when we add everything on this side of the equation, we're going to indirectly end up with the balance for our cash account. And if we actually add them up here, we're going to end up with 188,000 for our net cash provided by operating activities. Okay, hopefully that answered some questions that you have, and hopefully cleared up maybe a little bit of the difference between a direct and indirect method for your statement of cash flows. Let me know if you have any questions. I'll be happy to work with you and answer them for you.